Hi everyone, and welcome to today's morning report with me, Richard Perry, market analyst at Handtech Markets, for Friday the 6th of June, which is Non-farm Payrolls Friday again, and what I can imagine is going to be yet another volatile day after the announcement. Probably in the run-up to the announcement, the markets are going to have their usual degree of caution, which tends to be the case in the run-up to non-farm payrolls. But following on from yesterday's announcement by the ECB, there's been a significant improvement in risk appetite, certainly in the equity markets. Although, I mean, you could argue risk appetite wasn't bad in the first place, but certainly the Wall Street indices pushed strongly higher into the close. And that's filtered through into European trading today. Asian trading was fairly mixed overnight, however. Certainly the Nikkei, for example, was held back by a strengthening of the yen that we saw. But European markets are slightly higher. FTSE around about 0.25% higher. DAX only slightly higher, at about 0.1% up. But usually, what you'll find on Non-farm Payrolls Friday is that any gains that you see early in the session just tend to drift slightly backwards as the announcement approaches. So just bear that in mind. In terms of forex trading, just what we saw yesterday, I'll show you the dollar index, which had a significant decline backwards yesterday as the ECB announcement came through. Saw a bit of a flight away from the dollar. Certainly, a lot of the dollar pairs corrected back down in terms of dollar anyway. Certainly, and that has been reflected in this dollar index, which is back below the 80.4 mark. That is has been this pivot level over the past few months here. So that's, I think, interesting in itself. The VIX of volatility of equities, that is back lower again, so that's certainly reflecting this strong move that we saw yesterday on the S&P 500. But what we're looking out for today, obviously, is this key non-farm payrolls data. It's expected to be between 210 and 220,000 is the expectation, depending on where you get your consensus forecasts from. Unemployment also in the States is expected to increase very slightly to 6.4%. Now, that increase in unemployment is not necessarily a bad thing. That is forecast to suggest that there is a slightly improving entry back into the jobs market, and what you'll find is when there are people coming back into the jobs market, the unemployment rate will statistically will tick higher, and that is expected to be the case today. As I said, non-farm payrolls is forecast to come in at 218,000. So what we've seen here is there's no major improvement going on in this non-farm payrolls data. It seems to be fairly stable over the course of the past couple of years, to be honest. And that is one of the arguments against the improvement in the jobs data, is the fact that certainly if you look at the ADP number on Wednesday, there was very disappointing. Came in 170 odd thousand. And that was just shows that just this employment is just slightly not plateauing, but failing to really push forward as the recovery takes hold. So it's slightly going to be reflected again today, I think, in this jobs number that could come in around about 218,000, as I said, depending on who you read in your consensus forecasts. You've also got out today the UK trade balance at 9:30, forecast to extend slightly to the negative side to 8.6 billion pounds, that is, and also you got Canadian unemployment as well at 130, 6.9%, which is expected to be flat on the last month. In terms of my chart of the day, I'm going to look at the S&P 500, and as I said, last few days have been slightly disappointing, but certainly we had a burst to the upside yesterday, around about zero point 0.7 up on the day, which now takes us continuing towards that 1950 target, which is the target of a range breakout on the upside that we've seen, and that target's 1950, which is an initial target there. Just something that you can use as a potential turning point. But what we're now looking at is we've got 1940 on the upside, so only 10 points away. It's about 0.5%. Possibly towards that target, but also now we're up at overbought on the RSI, 70.8 on the RSI, which is the highest in 2014 on that indicator. December the 31st was the last time we got to this sort of level on the RSI. Also, we're seeing a little bit of extension of the stochastics as well. So you could argue that upside potential is beginning to get a little bit limited on this move. You've seen the S&P 500 up for, I think, 11 days out of the past 14. And added, what is it, around about 60, I think it's 80 points in 3 weeks. And you're seeing this rally that's been quite strong in the S&P 500, which could now suggest that upside potential is beginning to get a little bit limited. But we'll wait and see how that one goes. But certainly you do often find also that on the major data point days, you can often find a turning point in the markets as well. So being non-farm payrolls Friday, that is something that we need to be aware of. Okay, well, I wish you good luck in your trading in S&P 500. Clearly the big data that everyone has been focusing on today is 1:30 UK time non-farm payrolls, but until then I wish you good luck with your trading, and I'll speak to you later. Thank you.